Welcome to Top FS, where we make it simple to every trader around the world and where we teach you how to make money on your own without stress. Please like, share, and subscribe to our channel for more videos. God bless you.
In this video, we are going to be talking about lot size. Forex is commonly traded in specific amount called lots, or basically the number of currency units you will buy or sell. A lot is a unit measuring a transaction amount. When you place orders on your trading platform, orders are placed in sizes quoted in lots. We have different type of lot size. The standard size for a lot is 100,000 units of currency. And now there are also many micro and nano lot size that are 10,000, 1,000, 100 units respectively. We are going to be looking at all these things one by one, and we are going to be breaking them down so that you can have a better understanding. Lots, number of units. We are going to be explaining it one by one. Let's start with Nano. For us to trade on a Nano account, we need to have minimum of $100. Even though we can use $5, $50, we can use $80, $70. Now, on Nano, which is minimum of 100, let's say, for example, you have $100, you have $200, you have $300, 400, 500, 600, 700, 800, $900. So these are your equity. What is equity? Your balance that you have in your trading account. Now, let's say this is what you have. Even let's add $50 to it also. Now, normally, if you want to trade this, let's say $100 is your balance. And if you want to use any lot size, you are not supposed to use more than 0.01 lot size on your trading account. Meaning that if your trading move from 0 pips to 10 pips in your favor, it means that 10 pips times lot size, which is 0.01, times your 10, which is constant. Go and check one of my videos where I talk about pending order and the rest. I think I made mention of how to calculate pips and lot size. So this 10 times 0.01, which is your lot size, and times 10, which is constant. How do we get this constant 10? You remember when your pips are counting, when you want to get a pips, you start from pips, which is 0.0, 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9, that's from 0.9, then it will turn to 1. So meaning that When your bet count from 0.1 to 1, it will now become a pip. So that is where we got this 10. So if you multiply these 10 together, all of them will give you $1. So meaning that if you are using a 0.01 on $100, if the market move in your direction with 10 pips, you are going to be having $1. On your $200 account, you are not supposed to use more than a 0.02. On your $300 account, you are not supposed to use more than a 0.03. On your $400, you are not supposed to use more than a 0.04. On your $500, you are not supposed to use more than a 0.05. On your $600, you are not supposed to use more than 0.06. On your $700, you are not supposed to use more than 0.07. On your $800, you are not supposed to use more than 0.08. While on your $900, you are not supposed to use more than 0.09. Now, all these things are the lot size you are supposed to be using on this your equity. Let's say you have lesser than $100, which is this $50. You can't use more than the least one of them, which is 0.01, meaning that you are already exposing your money to risk already by using a 0.01, because according to the rules of the game, for you to manage your risk management perfectly well, you are not supposed to use more than a 0.01 on $100 account. But now you have $50, you are using a 0.01. So meaning that your equity is being exposed. So therefore, you are to follow the rules tightly. Don't go and overtrade. When you have $100 account, you are not supposed to use more than a 0.01, meaning that, let's say, for example, you see a lot of opportunity in the market, AUD, USD, let's say you see opportunity to sell, you see GBP USD sell, you see Euro USD sell, you see USD buy, all those things, you see them like that. On your $100 account, you are not supposed to trade more than only one pair with just a 0.01 lot size on it. This will help you to manage your account perfectly well. This will help you not to expose your capital. If you have $200, you can place 0.01 in two places. 0.01 in two places, which is you can trade two pairs. Let's say you can trade AUD CHF, and you can also trade maybe GBP USD, because you are having an equity of $200. Let's say you have equity of $300, you can place 0.01 in three places, USD CHF, or you just use your 0.03 at once. The moment you use your 0.03 at once on your $300 account, then you are not supposed to place any other trade, because your account balance is $300. So trade around your account balance. You using the lot size that is more than your equity balance is the beginning of you exposing your capital to risk, to loss. So your risk reward management starts from your equity, how you manage your equity. We are still going to be talking about leverage, but let's talk about lot size first. Now, from $100 to $900 is for Nano. It's for Nano. So meaning that from $100 to $900 equity, I will be putting it that way. For micro accounts, from $1,000 to $9,000 account, from $10,000 to $90,000 account is what you are going to be. This is what we refer to mini account. Now, from this $100,000 account to as much as you can have in your balance. Now, for us to trade micro account, for us to trade a micro account, you don't trade more than 0.1. Let's say this is $1,000. You are not supposed to trade more than 0.1 lot size. If you have $2,000, you are not supposed to trade more than 0.2. If you are having $3,000, 0.3. $4,000, you can answer that yourself. $5,000, answer that. $6,000, answer that. $7,000, answer that. $8,000, answer that. $9,000, which is going to be 0.9. So we are not supposed to use more than all this on if this is our equity balance. So 0.1, you have $1,000 and you have a trade. Let's say you have 5 trades and you want to trade those 5 trades. On your 1,000, you are not supposed to use more than a 0.1. You can as well just place on those 5 years that you want to trade, that you love to trade. You can place a 0.02, a 0.02, a 0.02, a 0.02, a 0.02. So if you plus all these together, 1, 2, 3, 4, 5, if you add everything together, it will all amount to 0.1 lot size. So meaning that if you place 0.02 on different pair, let's say there are 5 pair UD, CHF, USD, CHF, Euro, NZD, XAUUSD, and let's say US 30. Sorry, USD, JPY. Now, these are 5 pairs that you want to trade, and you know that you have done your analysis and you know that they will go to the direction you believe that they will go to that direction. Then, if you said you are using 0.1, 0.1, 0.1, 0.1, 0.1. If you add all these together, it's already amount to 0.5. And that is what equity is. That is a $5,000 equity. So you are using a 0.5 on $1,000 equity. Instead of you to just use a 0.1 or break it down like this and trade so that you not go out of the range of your capital. You are now using 0.1, 0.1, 0.1, 0.1. Everything together 0.5, which is on your $1,000, you are trading as if you have $5,000. Now let's see what is the risk behind it. If you calculate 0.1, which is your lot size, times your pips. Let's say the market move 100 pips. times 10, which is constant, I have explained. If you calculate it, if you calculate this thing, is 0.1 times 100 pips times 10. What will it give to us? It means that you are going to be having $100 as loss. Now, imagine you now use a 0.1, 0.1, 0.1, 0.1, 0.1 on your $1,000 equity. You are, instead of you to trade 0.02 because you know that you have an equity of $1,000, instead of you to trade 0.02, 0.00, 0.02, and everything will amount to 0.1, you now decided to be using 0.1 because you think you have $1,000. Let me use 0.1, 0.1, 0.1. Now everything amount to 0.5. Let's calculate it together. Now 0.5 lot size times 100 pips times 10. If you calculate this thing together, everything will amount to $500. Now, minus $100 from your 1,000, you have $900 balance, which you can still trade and make back. Now, you minus $500 from your $1,000 equity, you already have $500 balance. What do you think will happen to your psychology? You begin to be afraid. You begin to take irrational thinking trade, whereby you just, this thing is buying. Let me enter another 0.01. Let me enter another 0.1 in 5 places. That one too also will go against you. Your capital reduced to $200. You will enter again. Before you know, your account blow off. But if you follow the normal routine, there is no way you are trading in the forex market that you will not have a loss. But when we look at everything, if our profit is more than our loss, let's say you have 10 trades, you win 7 out of 10 trades that you pick, and you follow normal rule of the game by using the normal lot size that is according to your equity. If you win 7 at the end of the week or at the end of the month, meaning that you still have profit. But if you have exposed your trade on one trade, and you go on a full margin, you have $1,000, you are now entering a 0.5 on it, instead of it to use 0.1, and the market go against you 100 pips, you are already losing $500. Fear will set in. Your psychology will be affected, and you would like to recover that money back. You will now be picking unnecessary trade and using unnecessary lot size. At the end of the day, you will now lose that amount. You will now be saying, this market is not a good market. This market is not for me. This market is risky. This market is bad. No, you are the one that have a bad mentality. When a scam meets a scammer, the scammer will scam the scam, or the scam will scam the scammer. You want to come and steal from the market. That's what it means. You don't want to follow the process. Always follow the due process. Also, the same thing goes to, let me clear this thing. The same thing also goes to mini lot size. We have talked about nano. We talked about the micro. Now, let's talk about mini lot size. So if you have a mini lot size account, the mini lot size account is from $10,000 to $90,000 equity. Now, let's say you have $10,000 equity $20,000 equity, $30,000 equity, 40,000, 50,000, 70,000, 80,000, 90,000. Now, for $10,000 equity, you don't use more than 1.0 lot size. For 20,000, you don't use more than 2.0 lot size. So you can answer from 20,000 to 80,000. 90,000, you don't use more than 9.0. So meaning that if you have all this equity as your balance, if you want to trade many pairs, don't go out of your lot size. Let's say, for example, I have $10,000 and I want to enter 5 different pairs. I can as well and say 0.2, 0.2, 0.2, 0.2, 0.2. If you plus all these things together, what does it give to you? It gives you 1.0. Everything will result to 1.0. So meaning that you are still using around your $10,000 equity. That is what it means. Don't go out of your equity. If you go out of your equity, if you are using lot size out of your equity, that means you have started exporting your market, your equity to the risk of the market. You are already risking it. That is what it means. And also for $100,000, you to any amount you have, this is what you use. $100,000, $200,000, $300,000, $400,000, $500,000. Now look at it. For this, you have to use 10. That is what we call standard lot size. For this, you are supposed to use 20 lot size. If you have this type of capital, then you can fill in this yourself as an assignment. So let me answer this. This will be 50 lot size. So when you have this type of money, if you want to trade pairs, you can say, okay, let's say we have 5 pairs and I have $100,000 and I want to trade. I can use 2.0, 2, 2, 2, 2. If you plus all these things together, they will all amount to 10.0 lot size. 10.0 lot size. So meaning that you are still staying around your standard lot size of $100,000 equity. And if you say, okay, I want to use my 10.0 on one pair, fine. But if you are using 10.0 in 5 places and you have $100,000, that means you are already exposing that your capital, that your equity to risk. So this is all you need to understand about lot size. And let's go straight to our chart to see what we are talking about. Now let's say for example, for the sake of this lecture, let's trade. Let me open my terminal so that we can see. Now, if let's say we have $100, 0.01. Look at this place. This region is where you have your button You can see the one for sell. If you want to click sell, if you want to click buy, if you want to increase your lot size, this is the button you are going to be clicking. You can see that it increased to 0.02, which is the equity of somebody that has $200, $300, $400, $500, $600, $700, $800, $900, $1,000, on and on like that. Or you can just, if you have, let's say you have $10,000 account, you can just press 1. You can see it has turned. Now, I want to trade. We are going to place 0.01, 0.02, 0.03. Then we are going to place from nano to standard so that we are going to be seeing what we just ourselves right now. I'll be breaking the rules. This is just a demo account. I'll be trading so that I want us to see the practical aspect of it. Let's say, for example, is 0.01. We want to trade the nano, which is we say from 100 to 900. Let's say is 0.01. I place a trade. Is 0.02. I place a trade. Is 0.03. I place a trade. Let's go to another one. Let's trade 0. Let's say, for example, I have 10,000. I have $1,000. 0.1 by 0.2. Let's press 0.2. That's $2,000. Let's press 0.3, which is $3,000. Now let's press somebody that has an account of $10,000, 1.0. Let's press somebody that has account of $20,000, 2.0. Now let's press the account somebody that has account of standard, which is $100,000. So let's press 10 there. Let's buy. Now, even though you can see that my broker is already telling me that I'm using more than my equity, I've already exposed the account. Now, let's look at this place. Let's look at this place perfectly well. Let's look at our terminal. Now, I'm in a loss. As a trader, when you are trading, think of your loss first. What am I losing? Before you think of your profit. You think of your loss first. That, okay, if this market didn't go to my direction, how much am I going to lose? Now, look at it. Somebody that used lot size, you can see they have written in there, lot size. What are you doing on those pairs? You are buying. At the time you enter, and the symbol, the price at which you place your trade, your stop loss, you apply it, your take profit. This is your price, the present market price, the current market price, how the market is moving. This is why you see this is fluctuating. It's fluctuating. Why this one remains stagnant? This is the price at which you bought. Now, some broker do collect their commission. It has been charged the moment you place your trade. That's the first amount they charge you. So it's already here. So, and swap, when you leave your trade all night that you didn't close it in the previous day market hour, you leave it till the next market hour, that's when they charge you swap. Some broker charge it while some broker don't charge it. Like this that I'm using, they have some account that they don't charge it on, and they have some that they charge it on. So every broker have their own rules of engagement. Now, let us come back to what we are teaching. Look at 0.01. The trade I place on a 0.01. You can see that I'm having minus 0.23 cents. On this 0.02, I'm having minus 26 cents. On the 0.03, I'm having minus 66 cents. Now, look at it now. As your loss size as higher as you go, you will see that your loss is also going high. Now, look at it. The same way your loss is going high, if it will go to profit, that is the same way your profit will go higher. If you are going in a loss, your trade is going in a loss, your loss will be minimal if you are using 0.01. If you are using 0.1, it will go high. If you use 0.2, it will go higher. If you use 1.0, it will go higher. If you use 2.0, it will go higher. So it is profitable both on the loss. It amplifies both losses and profit. It amplifies both losses and profit. Now look at it, 0.01. I'm having minus 14. 0.02, I'm having minus 24. 0.03, I'm having minus 36. Now look at 0.1, 0.70 cents. Look at 0.2, I'm having minus 3 point something. Look at it. 0.3, I'm having as the market is moving in your direction or against you, the same way that your different loss size you place will be. That's how it will be. Now, look at 2.0. I enter 2.0 and the market is going against me. I'm already having minus 126. Imagine that I have $500 account and I place 2.0, meaning that on my $500, I'm already losing minus 200 from it. I'm already losing 100. I have just 300 balance. Now, minus $100, 140 something out of it. I'm already losing 140 something. So I'm having 360 balance. Look at it. Let's say 42. I use 0.3. 42 minus $500. I'm already exposing. But let's say I stayed around 0.05 or 0.03. Now you minus 12 from this $500. It's nothing. It cannot bring fear to you. It cannot bring fear into your trading. You will be calm. But the moment you are using higher loss size, that is more than what you are supposed to use on $500 account. The moment you are using it, you are already exposing that your account to a risk. So meaning that if the market just swipe or you have a surge, what we mean by surge is that let's say there's a news and it just dropped, boom, or it just went up, boom, your account can be cleared once. That is what it means. Now, let's close it. Let's use 10.0, which is the standard. Let's use it on it. Now, let's use 10.0. Buy. Look at it. Placing 10.0, the first one give me minus 480. Because that's the commission. They once you place trade, depending on, they will charge you. I already have minus 550. Minus 550 $100,000. It's nothing. But you go and place it on the account of $1,000. You went on a full margin, standard loss size 10.0. You've already minus 580. How much remain? You also will join the league of people that say, Forex is not good, Forex is bad, Forex is this. That is why you need to follow the account balance that you are having. Follow the losses that is attributed to that equity that you are having in your account. Now, let me close this. Everybody, let's look at it together. How much balance do I have here now? I have 6,116.50 equity. That's what we have at my balance. Now, answer yourself the question, what lot size are you supposed to use according to what I have been teaching you? What lot size are you supposed to use? Drop it in the comment section and let's see if you understand what we are teaching. Thank you so much. Enjoy yourself and have a beautiful time. You can take your time. Make sure that you watch this video again and again for you to have the better understanding. And if you are a beginner that you need to understand this market perfectly well, make sure you go and watch every of my video from beginning, from scratch. What is Forex? How do I trade in this Forex? Everything, done a video on it, and enjoy yourself. Thank you.
Thank you for watching our video. I believe you are blessed and you enjoy yourself. And for you to enjoy more of our videos, please like, share, and subscribe. And please make sure you watch the next video for you to have more broad knowledge. Till I come your way, remember.